heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's off. This is Bloomberg Technology. Coming up, we go live to Cupertino, California as Apple's annual developers conference kicks off. Full coverage ahead. Plus, we sit down with DreamWorks founder Jeffrey Katzenberg. That's as his venture firm raises nearly $500 million for a new fund. And we sit down with MoviePass co-founder Hamet Watt to discuss the new documentary on the company's dramatic rise and its fall. But first, let's check in on these markets. And look, we have a lot to digest when it comes to political risk over in Europe, when it comes to anticipating what the Fed does, and indeed where CPI pushes us from the US macro perspective. And we have some new entrants to the S&P 500, and some of them are tech names, and they're helping, though, the NASDAQ sustain a little bit of risk on attitude. We're up just 0.1% on the key tech benchmark. We're looking, though, at bonds selling off across the board, most notably in Europe, but US yields also pushing up as we do have some trepidation about which direction the Federal Reserve points us come Wednesday and Thursday throughout the week, indeed. With euro under pressure. Look, down 0.6%. This is about France. This is about political risk. This is about the right basically gaining yet more power when it comes to European Parliament and what French President Macron is trying to do to perhaps gain back the narrative, calling, of course, a key legislative vote. Let's move on and have a look at what's happening in terms of individual names in the tech area, though, because Microsoft up 0.6%. We've got a buy rating coming back on this company. They're seeing further uptick on the share prices all around AI, of course, and it's leading us from a points perspective. NVIDIA actually turning to the upside. We're up 0.7%, would have been down when trading first started in what is now a much smaller price point, 1/10 of the price point that we'd seen currently on Friday, of course, because we got that stock split. 121 is where we currently trade. Maybe retail liking this new price point. I'm looking at Apple, though, 195. We're off by 0.75%. We are all eyes on WWDC. What will we get in Apple in terms of its AI focus? What Apple Intelligence is there? Jackie Davalos is with us live from Cupertino to discuss really what we're going to expect, a whole raft of how AI is going to be injected into the software and into the hardware, Jackie.
Expectations are really high, Caroline. In just under 2 hours, Tim Cook is going to deliver a keynote address which will lay out this artificial intelligence vision. Now, thanks to Mark Gurman's reporting, we have a little bit of a preview for us what to expect. The first being its AI system called Apple Intelligence. This is where we will see some generative artificial intelligence features being embedded across the iPhone, iPad, and Macs with that new operating system upgrade. There will also be a major announcement with OpenAI. This is the technology, of course, that powers ChatGPT, which will bring a version of a chatbot to Apple and perhaps even provide a makeover for its current AI assistant Siri. There's a lot hanging here, Caroline, especially because Apple has been viewed as somewhat of a laggard in comparison to tech peers like Microsoft and Google, which it is also in conversations with for its large language model technology, Gemini.
I like that context, Jackie, because there has been a lot in anticipation, most markedly in the share price managing to push higher, market capitalization back on top for Apple. And I'm interested as to whether really we're going to be able to steal the narrative back. Is having partnerships good in the short term?
That's certainly the hope, but Apple really isn't fooling anyone here. It is somewhat behind the curve, and this keynote address will really show just exactly how it intends to bring some of that momentum back. Think about exactly what Apple excels at, devices, and really coupling that with cutting-edge software. But AI, and specifically generative AI, is a whole new ballgame. So just exactly how it plans to integrate AI features across products like AirPods, for example, or even bringing it into augmented reality devices or home robotics, that will really provide the longer-term picture for how AI will change Apple's future.
Jackie Davalos on the ground. Love the reporting, but a couple of hours still to wait. Let's keep this conversation going. Let's get a really feel for whether or not this is going to help them shift more phones. Maribel Lopez is with us, founder and principal analyst at Lopez Research. And Maribel, it's great to have your voice because that's what everyone's wondering. Is the AI announcements going to be enough to make us upgrade our phones right now?
What we're seeing with the smartphone market right now, it has been driven primarily by AI features. We've seen the camera features come into it, but I actually don't think it's just the smartphones we're looking at. As mentioned earlier, we're seeing the opportunity for Apple to infuse artificial intelligence across its entire stack, including the Vision Pro, which when you look at the augmented reality, virtual reality market, we still have a long way to go in terms of customers adopting this in droves. So there's great opportunity across the entire stack. I don't think anybody's really talked about the opportunity to improve the services landscape with artificial intelligence. So we're actually going to see a lot of activity, I think, with AI across the entire Apple portfolio, and including the developer landscape, where we expect them to have easier to access software coding tools using generative AI.
And this is what it's meant to be about. Yes, investors get excited, but we're meant to be seeing the developers get excited here. Maribel, I'm interested in what you're saying about services. How will that shift?
So what we're saying right now is services have looked pretty much the same since the dawn of cable. We go in, we select a program, there's a lot of pull, not necessarily enough push or recommendations or guidance. So there's a tremendous opportunity there in terms of how do we make things more discoverable moving forward. So that's one aspect of it. We haven't talked a lot about healthcare yet. There's a real opportunity with AI to fundamentally change what could happen in some of these smartwatch and health apps going forward. So really, I know that everybody has said Apple is behind in AI, but I'd like to pose the question of how much revenue they really lost by quote-unquote being behind. If you look at the only person that's really making a ton of money on AI right now, it's NVIDIA. If you're selling picks and shovels, you make a lot of money in AI. Everybody else is just still coming up with a strategy that they're trying to propose to consumers to get them excited about the new technology.
You might argue maybe Microsoft's making some revenue, and certainly they've been able to do so by teaming up with OpenAI. And how, Maribel, should that ongoing partnership look like if we do see the OpenAI-Apple convergence here?
Yeah, this is really interesting because I think we've seen all the cloud computing providers tie up with foundation model companies, and it's been very good for them because the money they'd have to invest to build the foundation models themselves doesn't make any sense. I think this is the same for Apple. They can tie up, they can use the foundation models. We're seeing a wide range of innovation that's happened over the past year or so, Caroline. So we have many models. I expect Apple in the longer term to be what we call AI engine agnostic, put in any foundation model. That's not where the differentiation comes. The differentiation comes from not just them using the language from generative AI, but from them actually building their own AI models to layer on top of that. And you would better bet that Apple is building its own AI models as well to layer on top of this. So the combination of these two means the things that are, say, more pedestrian and generic in nature for AI, they can outsource to a foundation model company. But the things that would be more specific to Apple products, those are the things that they're going to invest their AI talent in.
And maybe we've seen this time and time again, that Apple isn't first, but it's best. And we're waiting for ultimately then to articulate what is going to be better than, for example, how already Samsung's infused Google AI within its hardware. Will it just beat out the competition?
I think what we're looking at right now is how will Apple propose the use of multimodal models. So everyone says that Apple's behind, but that was on the basic generative AI chatbot style model. What we saw in Google I/O was really a new way to think about how to use AI in terms of adding vision and imagery and generating a wide range of things, or using it to, say, change a process, look at an image and suggest how to make it better if it were even a process or a workflow. So I think there's a tremendous opportunity for Apple to show that across its stack. And this is what I think is better. It's not enough to just layer a chatbot on top of your software and say, I've made it better. You actually want to create a fundamentally new experience. And this is, I think, where Apple excels, is in creating that easier experience. So they're not first to market with a lot of things, but they're the first to try to make it the best to market.
We are seeing hope, some exuberance factored back into the overall market capitalization of Apple. We're back at a $3 trillion handle. We're looking at nearly eclipsing the record high that we saw back in 2023. Maribel, do you think it will be revenue generating in the near term from an AI perspective for Apple?
I absolutely think that AI will be revenue generating because if you don't have a good AI stack in your product, you're actually not going to be able to sell a product in 2024 and beyond. So therefore, it will be revenue generating. The question has always been how much and can it outsize the competition? So this is still to be determined, but we're all very optimistic that Apple spent a lot of time thinking about this. They didn't race into the market, so they could come with a very solid showing at WWDC in what I would consider the things that matter. I do think that from a technical standpoint, we always expect Apple to blow the doors off of it, but I really think we have to look at would somebody really be pleased with this as opposed to is it going to revolutionize the world? And I think if they can nail that, they can nail people really wanting to use AI because it does something meaningful for them, then they will sell a ton of iPhones, smartwatches. They may even sell a fair amount of Vision Pros, particularly in the enterprise market. So we're really optimistic and excited to see what they show us next.
A little less than 2 hours to go. Maribel Lopez, thank you so much for building us towards that excitement. Founder and principal analyst over at Lopez Research. Meanwhile, coming up, some shareholders over at Tesla, key highs this week too. The vote on the $56 billion pay package for CEO Elon Musk. We'll get the latest on what we can expect from the vote next. Meanwhile, let's just shine a light on the meme stock. There was all the rage on Friday as Roaring Kitty came back to YouTube. GameStop now under pressure still by more than 3.8%. That's as we know that they're selling more shares, trying to make the most of some of the hype within the share price. $27 is where we trade. Baird analyst Colin Sebastian saying that the results we got on Friday, the disappointing results, underscore ongoing challenges to the company's retail business model. This is Bloomberg Technology. Now, the Supreme Court has agreed to Meta's request to consider killing a multi-billion-dollar shareholder lawsuit that accuses the social media giant of misleading investors about the data harvesting scandal involving political consulting firm Cambridge Analytica. Remember that one? Joining us now to really go into why this is meaningful, Bloomberg's Mike Shepard over in Washington. And actually, it's not just Meta that perhaps wants this killed off, but certainly Chamber of Commerce wants to have this heard by the Supreme Court because they're worried that there's a misreading of what's happening with the SEC and there's a lot of, lawsuits, a wave of meritless securities fraud suits, they call.
Well, Caroline, when you look at the stakes for Meta, it is financial. It's a $2 billion potential settlement. When you talk to our Bloomberg intelligence analyst, our colleague Matt Schettenhelm has analyzed this and found that it could be that kind of a payout for the company to those aggrieved shareholders. But the stakes are far wider, as he alluded to, because, look, since 2005, the Securities and Exchange Commission has required companies to disclose the risks that could have a material impact on a share price. It could be information, it could be an event. And the shareholders in this case are alleging that Facebook was too slow in disclosing those risks from the Cambridge Analytica episode. Now, the Chamber of Commerce and others, though, are saying that those same rules have been too widely applied and are generating a whole bunch of frivolous, in their view, lawsuits that have no merit. And they have sided with Meta in this case.
It is interesting just to go back to July 2018. That was when we saw the biggest erosion of value with that stock plunge as we started to perhaps front run what ultimately the damage from Cambridge Analytica and the reporting on it could mean for Meta. But Meta's argument here is that we could never have anticipated how bad this would get for a shareholder perspective.
And also, they're saying, Caroline, that all of the information and risks were out there already. They had been reported publicly by The Guardian and then by the New York Times, so that the element of surprise for shareholders was really gone, at least as far as this episode was concerned. And the concern from the company is that they are being punished for something that is so far back and that maybe since then has been wiped out. If you look at how the company's shares have gained since then, thanks to acquisition and expansion and other changes.
Meanwhile, of course, those shareholders say the company had inadequate disclosures. We'll see how this goes. Mike Shepard, brilliant. Thank you so much indeed. Meanwhile, let's just talk about some other shareholders now, Tesla's, because they're voting this week on a $56 billion pay package for CEO Elon Musk. Let's get into the details. Bloomberg's Max Trafkin is here. And what's interesting is, well, this even if it goes through, it might not help Elon Musk get his $56 billion pay package.
Yeah, absolutely. This is going to be settled in Delaware court, and I suppose possibly in Texas court or maybe in a federal court at some point, depending on how Elon Musk responds. But what Tesla is trying to do is create, as our colleagues Dana Hull and Jeff Feely wrote, is to create a kind of way to explain this to the court. They're going to say, look, our shareholders approved it in 2018. Now they're approving it again, hopefully, as far as Elon Musk is concerned, in 2024. So it's more about forming the appeal rather than some kind of definitive resolution to this case.
It's like narrative, basically.
100%.
But the narrative with some of the, well, proxy investor groups and those advising shareholders hasn't been great. They've been saying, don't go with us.
So these proxy advisors generally don't back these gigantic pay packages. They did not back the 2018 one. But what is interesting here is that you have some major shareholders coming out and saying, we are against this. Over the weekend, the Norwegian Sovereign Wealth Fund said that they're going to vote against this pay package, or that as far as they're concerned right now, they're going to. Maybe there'll be some further negotiation between now and Thursday. But in any case, that fund is a major shareholder, top 10 shareholder. Norway is also a huge market for Tesla. So that seems like a significant kind of caution light for Elon Musk right now.
June 13th, keep an eye. Max Chafkin with all the details on Tesla. We thank him. Meanwhile, coming up, we're going to sit down with Hamet Watt. He's the co-founder of MoviePass. Remember that business? We're going to be discussing the new documentary that really highlights the rise, the fall of the company, and who is actually founding it and then leading it. He's reclaiming the narrative. This is Bloomberg Technology. There's a new documentary out there from Max, and it's highlighting the rise and then the fall of MoviePass, the subscription app that allowed users to go to as many movie showings as they want for a monthly fee. It was highlighting also how the founders, they lost control of the company and its narrative. They're regaining it. Hamet Watt was one of those founders. And indeed, you're now at Upfront Ventures as a board partner. You've got Share Ventures as well, where you're trying to reclaim the narrative of allocating money and capital to minority founders in particular. Hamet, many out there might go, sorry, you're the founder? You're a co-founder? I thought it was Ted Farnsworth. I thought it was Mitch Lowe. Educate us.
Yeah. Well, it was a process. My co-founder and I, who were in love with the movie-going process, wanted to innovate on the model and started the company 2011. We raised a couple rounds of capital, but got to a place like many other entrepreneurs where we struggled. And so we had to raise some capital from some folks that we probably didn't know as well as we should have known. And ultimately, they were able to invest quite a bit of money into the company and take over the company. And it was just quite an experience. You have to watch the movie to get all the details.
And actually, the documentary does a good bait and switch in a way of allowing you to go with what your own bias is, that there's these two white co-founders. And in fact, there were two black co-founders who were ousted. And I'm interested now as to what you think the learning of the overall documentary is, because you say you struggled to make and get funding, like many. But do you think you were less likely to get funding because the fact that you were black?
A little bit, but I was very mindful in this documentary. I didn't want it to be a black versus white thing. All entrepreneurs struggle at some level raising capital. And we were very fortunate. Our early investors were all white. So it really wasn't exactly that, but it's natural. I think one of the things we talk about is just the idea that sometimes we walk into the room raising capital, we're probably the first time that, at that time at least, that two black co-founders were walking in trying to innovate on an industry and trying to reimagine that industry. So that's hard by itself. It's also hard when you have the extra unfamiliarity of not having invested perhaps in folks that looked like us.
What's interesting, your other co-founder, Stacey Spikes, has gone back and bought the business afterwards, sort of raised its value, and he's brought it back, and he's still innovating. But almost your premise was right. You just needed the movie theaters not to build their own subscriptions, which they went and did. But really the issue was about the price point here. What do you think about the price points of movie-going, of content consuming, of the way in which we see the landscape evolving?
Yeah, it felt like such an inevitable change to happen in the movie-going space. It's kind of why I came to LA to begin with 20 years ago, because I felt like some of this industry was slower to innovate. So we did feel like it was inevitable, and we felt like really the opportunity to be a Switzerland in the space was the sweet spot. Of course, there are opportunities for silos and for folks to be able to do it on their own. But we thought that the idea that there could be a community that tied it all together could be special. And then we were also going to innovate. We did innovate quite a bit more than a lot of the folks were individually. It's been a great lesson. I think it was a long time ago that we started that company, and where movies was probably more centric to our world. I've now moved on to focus on health and longevity and things that I'm much more passionate about. But Stacy's making a go at it. He's doing a great job. I think he's turned the company to be profitable, and he's figured out the pricing model that will work long term.
How much do you think there's still an issue of founders versus the money they raise? Who has the power when ultimately some of these contracts are written?
Yeah, I think, you know, it ebbs and flows. I mean, there are times where the founders and the entrepreneurs have significantly more leverage because there's way more capital than there is companies. And then sometimes the capital has a lot more control and power and say so. I think ultimately it's you know, as a founder and an investor, I try not to think about that. I try not to take advantage of leverage in a way that's going to be unfair, because the tide is going to change at some point anyway. And I think we're seeing that play out now as the markets are starting to come back in terms of the private markets, and investors becoming more aggressive again. And now entrepreneurs and the leverage is starting to shift back and forth again.
You're focused on wellness, as you say, longevity, those founders out there, Hamet. And how are you seeing the ability for yourself to write checks? And how are you seeing things different from when you were out there trying to fundraise?
Yeah, I'd say there are a couple things. One is my model is slightly different. I have a venture studio and a fund. And so I like being on both sides of the table, so to speak. I like inventing and reimagining new businesses. And then I also like supporting entrepreneurs. And I support entrepreneurs that oftentimes may not get that opportunity. I'm looking for something different in many ways. I think it's changing a lot. I hope we're going to see some outcomes that start to prove that. But there's a tremendous amount of talent, and we're really looking at opening the aperture now to figure out how to get more talented entrepreneurs into the game, more talented operators, scientists, innovators. More perspectives on problems leads to better solutions to problems. So I'm excited about where we're going. There's still a long way to go, don't get me wrong, but I think we're in a good place.
Well, I'm excited about having some of those founders that you're working with, having some in the studio, companies that you build and then birth and grow coming on the show. Hamet Watt, come back. Yeah. You, of course, are MoviePass co-founder. Now, let's, of course, be thinking that later today we're going to be hearing from the current CEO of MoviePass, Stacy Spikes, who's joining Bloomberg's The Close. Now, coming up, we'll go back to Apple's Developers Conference. And what to expect? Carolina Milanese, she's going to be there. She's going to be joining us. It's all Apple intelligence. From New York and over in Cupertino, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Quick check on these markets, because we're withstanding some of the overall pressure on the markets coming over from risk aversion in Europe and actually pushing higher in tech. We're up 0.3% on the Nasdaq 100. Microsoft, some of the other key names, managing to lead us higher on a points perspective. I'm looking at the French 10-year yield as Europe ends its day trading. What a political upheaval at day of trading it has been. And of course, concerns about what's happening with Macron calling that legislative vote. And we're seeing yields push up some 12, 13 basis points. We're also looking, though, at Bitcoin managing to still be up about 0.3%. It sold off hard on Friday. We're now still gathering a little bit of steam at 69,000, near that record high, there or thereabouts. Move on, have a look at what's happening on the individual movers at the moment. I'm looking at NVIDIA. It happened. We stock split. We're now up more than a percentage point, having actually just sold off into that move that happened, of course, on Thursday, Friday. We're currently 1.5 points higher, but still at 122. So, well, 10% of where we were trading back on Friday. I'm looking at Apple, 195. We're currently down by 0.7%. We have built and crescendoed in terms of market capitalization into today, which is WWDC. We really want to understand what we're going to be getting from AI, from Apple Intelligence over in Apple Park now. And we want to bring in Carolina Milanese, President and Principal Analyst at Creative Strategies, for your take on what to expect today. We are going to get a whole host of the way in which developers are going to be able to innovate across Apple, but also what me as a consumer might want to therefore go out and buy a new phone for. What are you excited for?
Absolutely. I think you're spot on in both today being about the developers and how they can leverage artificial intelligence to drive more experiences through their applications, but then is about the consumer. And for Apple, it's always about the hardware. It's about bringing value back to the hardware so that we want to upgrade, so we want to stay up to date as a consumer perspective. So to me, it's going to be about ease of use. It's going to be about really mass market things that consumer want to do. Maybe around the camera is always a big thing for consumers today, or just the ease of use of the phone itself. The phone gets to do more and more today, and navigating it might become a bit cumbersome.
It's interesting that you say the photo, the camera. I mean, artificial intelligence has been interlaced within Apple's products, particularly in the photo product, for a long time. It's just generative AI has brought about this idea that Apple's behind the curve. Is it truly behind the curve, Carolina?
I think no consumer is running into a store today asking for generative AI, right? I think from a street perspective, there is a perception that Apple hasn't talked enough about generative AI, if not at all, up until now. But the reality is there are different kinds of AIs. And as you point out, Apple has been doing AI for a long time, from machine learning, from a silicon perspective, into their neural engine. So they're not behind from a technology perspective per se. What we want to see is more, or actually what the street wants to see is more proof that they have all the ingredients in place to deliver and stay in pace with the Microsoft and Google of the world.
And also how long those ingredients last. OpenAI, a partnership with that company, short to medium term?
That's an interesting, if it's true, is a very interesting collaboration, because it's the first time that we would see Apple really bringing a name. Obviously, we know that they're collaborating with Google for parts of their search and everything else. But, you know, it's the first time that we will see a name associated with Apple for a delivery of an experience. And I do think this is much more longer term than short term.
Creative strategies is in your business's name. So can you tell us how Apple's going to get creative with the way in which we use a phone going forward? How will generative AI change the way in which I use my next, latest and greatest software and hardware from Apple?
If you look at the history from an iPhone perspective, the things that always resonated with consumers are things that you use every day. You know, if you think about the beauty of iMessage for a lot of people is about seamless experience in communicating. It's a rich experience in the way that you communicate. You know, emojis were that thing that Apple was just got everybody excited about, and there are rumors about a new version of emojis that will leverage generative AI. You know, it's the things that I use every day that are going to get me even more entrenched into the ecosystem that Apple is trying to do, because that, at the end of the day, is what that engagement, the everyday dependency, is what is going to get consumers to continue to look for the next device, the next experience.
Does Apple in its entirety have to shift? There's an interesting line in some of the reporting done by Mark Gurman and others here at Bloomberg that basically it's going to have to shift from what is a hardware, software, services business more to becoming like a hardware, AI, cloud company. And what does that distinction really mean?
The cloud part is going to be important going forward for sure, because obviously from a generative AI perspective, you do need a cloud component. I do think that that is and versus or. And I do think that generative AI is going to be pervasive across their experiences from a software perspective as well as services perspective. There's a lot that generative AI, for instance, can do as far as music or Apple TV, you know, shows recommendations. So there's a lot there that the whole ecosystem can benefit from, and the cloud will be a means to deliver that.
You're ultimately saying we need to hear from them that they've got all the bits in place, the infrastructure necessary to leverage what is this new generative AI reality we're going to hit, Carolina. But how quickly do you think it will be ultimately revenue generating for Apple? How quickly will they see the rewards for some of these investments?
I would think that the first thing we're going to see is the replacement cycle, right? That is going to be the biggest way to see the return on investment from a revenue perspective. Obviously, with a lot of compute necessary on the device, you are going to need the latest and greatest silicon on the device. So I think it's natural to think that if you have a phone that is 3-4 years old, you will have to upgrade in order to take advantage of the new features that are coming that are based on generative AI. So the first thing you'll see is that an upgrade cycle across the devices. We've seen it already with the M4 chip in the iPad that was launched just over a month ago.
Will it make us buy a Vision Pro?
I don't know about that. I think that for now, generative AI is really more about the mass market and the everyday device. I think for Vision Pro, I'm sure that we'll get there. I don't know if it's necessarily the priority today. I think it's more about what we use every day. And I think that historically, that's what Apple has always done, is taking features or taking moments and it's an example of things, even from a technology perspective, that others have brought to market and really made that a mass market moment. And that's what I'm expecting today.
Carolina Milanesi, President, Principal Analyst over at Creative Strategies, awaiting the all-important WWDC kickoff. We thank you for front-running it for us. Meanwhile, time to go to talking tech now. First up, Microsoft says a core feature in its AI-branded PCs will be turned off when it ships. The feature is actually called Recall, and it creates a record of everything users do on the PC. Now, the tool set off alarm bells for security researchers, saying it could be used by bad actors to access and scoop up data and information. Plus, Xbox announced new entries into its popular gaming franchises. At a showcase over the weekend, new titles for Doom and Gears of War series were announced. The presentation comes amid layoffs of course, 1,900 employees in its gaming division earlier this year. And Volvo Car is recalling nearly 72,000 of its fully electric EX30 due to a software issue. Now, the car may have an error in their center screen that causes the speedometer to go into test mode, basically, when the vehicle is started. According to Volvo, no other models were affected, and there have been no related accidents or injuries reported. Coming up, media veteran Jeffrey Katzenberg raises nearly $500 million for his new venture fund focused on cybersecurity. We're going to discuss with him and colleague next. Talking of content creation, this is perhaps one of the messiest deals of all time, but it feels as though Paramount Global currently moving just down about a percentage point. A former media executive, Edgar Bronfman, you know him from Warner Music, from the liquor giant Seagram, he's backed by private equity firm Bain Capital, potentially to be buying National, the overall parent company of Sherry Redstone, instead, maybe, of Skydance. This is all about Edgar Bronfman having a $2 billion plus bid for the company that controls Paramount. This we continue to watch. National Amusements, of course, the key one that they would be looking to purchase. This is Bloomberg Technology. WndrCo. It's the investment firm and media veteran Jeffrey Katzenberg and tech entrepreneur Sujay Jaswa. It's just announced that it's raised nearly $500 million for its latest venture fund. We're very pleased to welcome to VC Spotlight both founding partners, Jeffrey and Sujay. Welcome, gentlemen. And, well, I want to ask you, Sujay, first. The perspective is on, what, security, most importantly, cyber threats, or artificial intelligence? Where is your sweet spot at the moment, Sujay?
Well, you actually covered it all. That's our sweet spot.
Good. Okay, bye.
What we're trying to do is keep you and your family safe online. You know, we start with the consumer. That's obviously where Jeffrey's background and my background come from, is thinking about how to apply new technologies to solve problems for each of us at home and at work. And when we think about cybersecurity, one of the crazier things of the past couple decades is you can't think of a great innovation that is designed to protect all of us or our children or our elderly relatives. And that seemed shocking and terrible to us. And so we decided to go try to solve that.
Truffle hunting is how you describe what you're going to go about and do, Jeffrey. Talk us through how that is, what a smaller amount of investments, but more integral, more important, more impactful.
Well, I think that's the opportunity today. There's so much incredible innovation going on, and we have found for us staying quite focused, picking a handful of, call it 5 to 7 investments each year, as well as starting a company ourselves. We like to be builders as well as investors, and so doing those things in parallel has proved to be, quite successful and quite rewarding for us. We all started as builders. We have founded companies ourselves, and we wanted to do both those things in parallel.
Sujay, I'm interested in, for example, as we came out from WWDC or about to anticipate Apple's latest unveiling, one of your big bets is 1Password. We're looking at it now. But Apple is looking to take that on with its own homegrown ability for storing your passwords. How much do you worry about competition in this cyber area?
So I used to worry a lot about competition 15 years ago from big tech platforms. And at Dropbox in particular, Steve Jobs' last speech, he said he was, what do you use right now? Use your Dropbox. I'm going to change it all with iCloud. And obviously Dropbox did just fine despite that competition. My view is that the best product ultimately wins. And in the case of 1Password, they've built an amazing solution for helping you cross-platform across Apple devices, Android devices, Microsoft devices. And so as long as you stay focused on the customer, you'll be fine as an entrepreneur.
Jeffrey, it's a tough question to ask, but of course many would associate of late your work with Quibi. And of course that was a big bet and a building bet, and one that didn't pay off. Content is really tough right now, but how has that been tough to explain to the LPs and who you've brought over?
Well, first of all, I know it feels to you like it was yesterday. In fact, it was 4 years ago. It was a moonshot. That's part of being an entrepreneur. It's also part of being an investor. It's a balance of the type of risk reward you take. Certainly that was a risk and our investors understood it. But digital media in general actually has turned out to be a very, very challenged area, both for creators and for investors, unless you owned and controlled the platform itself. So we actually, 4 years ago, pivoted out of digital media. We have no investments today in digital media. We continue to look at it because honestly, as you were talking about in your earlier segments, with the introduction of AI, there's going to be a slew of new types of opportunities, new types of content. I think ultimately a new and innovative platform is coming our way sooner rather than later. And we certainly will want to be on the forefront of that. But as we sit here today, that opportunity hasn't presented itself yet. And again, more importantly, for the last 3 or 4 years, our focus has 100% been in tech, and as Sujay outlined to you, particularly consumer tech.
And Sujay, how has the LP cohort been willing to jump on to this new fundraise? Have you got new LPs that come in to this latest fund?
Yeah, the answer is it's virtually entirely new from an LP standpoint because WndrCo was originally set up as a holding company. And so these are our first traditional LP GP funds. And what I would say is that several of our strongest supporters in the holding company, again, became our big supporters in the new funds. But as you know, it's been a difficult fundraising environment, and we're thrilled with the new partners that we have. But we also understand that we're setting out to build these relationships with folks that didn't come in for the long haul, and hope to get them in the future.
So, Joe, I'm going to ask you another one, just on exits, therefore, because that's obviously what the LPs and what you want to be seeing. It's interesting that Figma was one of your big bets, and that exit sort of unwound due to regulatory issues for Adobe and Figma. You've also done an exit, an interesting one, where you've tied up two of your own sort of home-built companies together, and we're seeing the likes of Aura by Pango. That was all the way back in 2020. What is the direction of travel for exits? Is it M&A? Is it IPOs?
Yeah, when you build a great company, you'd like to see it go public in an ideal situation. You want these companies to run for many decades. While exits are always top of mind in a traditional fund, the best technology companies get built over multiple decades. And from our standpoint, our ambition and goals are to build great technology companies. So we don't look to the exit primarily. We look to building a great company. And if the exit comes in the near term, that's fine. But our ambition is to build them for the long haul.
Jeffrey, we, of course, did introduce you as the fact that everyone knows you from your media expertise. You're saying at the moment it's very hard in the digital media space. What is it, from your mind, is going on with Paramount? We were just breaking that the Wall Street Journal is articulating that Edgar Bronfman is eyeing a $2 to $2.5 billion bid for National Amusements. I mean, is there any hope for M&A within the content creation space? Will Paramount get a deal that is a good one for investors?
Of course it will. Those assets are singular, they're unique, they're generational, and the reason why there is so much focus and attention around them is because of scarcity. And so, right now, today, it's a pretty complicated set of circumstances there. You have in Shari Redstone a controlling shareholder. They've actually had, obviously, a very difficult time over this last year or two. But make no mistake about it, these are still very, very strong assets. And maybe they need to be reconfigured and redeployed in a new and maybe somewhat innovative way. But foundationally, the reason there is as much interest in them is, there's good reason for it.
Well, you'll know, having been, of course, with Walt Disney Studios, having built over what was happening with DreamWorks and your experience continuing the content and now consumer cyberspace. Jeffrey Katzenberg with us, of course, Sujay Jaswa.
I will tell you, I just literally went to an early breakfast, ran into Bob Iger, Jeff Shell, and Brian Robbins, all in one room at one time. The current president of Paramount, Jeff Shell, who's on Redbird, and Bob Iger, who's watching it all.
That feels like a movie script.
Quite a morning.
Yeah. Next time, invite us to that breakfast. We'd love to come. Jeffrey, it's great to have some time with you. Thank you. Sujay Jaswa of WndrCo. We appreciate both of you spending some time with us today. Meanwhile, coming up, we're going to be going back to Apple Park, where we await Tim Cook's keynote and the company's AI plans. More on that next. This is Bloomberg Technology. Apple Intelligence. What will it look like, feel like, what will be announced at WWDC? Bloomberg's Jackie Davlos is live from Cupertino. And look, we're almost, an hour, a little over away from today's event kickoff. What are you expecting in terms of features to be announced?
Well, the good thing is we have a lot to gather from Mark Gurman's reporting. The key thing will be Apple Intelligence. That's the new AI system it plans to roll out in the iPhone, iPad, and Mac OS systems, which will get an upgrade. Now, the real key will be the AI features embedded inside. Let's drill down into some of those because that's what people really want to know. What will show up on our devices? A big part of this push will be summarization. Think summarizing web articles, other web pages, your text messages, making it easier for you to dissect the information that you have to make a few clicks on your phone to actually get to. Think also your mail app. Auto reply, the kind of thing that Gmail already has, but Apple's creating its own version of this. We'll also get voice memo transcription. That will come in handy for me, Caroline. I use that a lot. And so these are just a few of the AI features we'll expect to see, but of course, it's all part of a broader AI vision Tim Cook will address at 10 a.m. Pacific, 1 p.m. Eastern.
And partnerships, an OpenAI partnership, perhaps?
That's the big one. Who can forget? Because Apple can't do this on their own. They need the help of OpenAI, which has the powerful ChatGPT technology. We'll see some kind of chatbot version also in Apple's new upgrade. But of course, the question is, will this really revamp Siri in the way that it really needs to? It's kind of been a disappointment since its rollout nearly a decade ago. And so here we'll have OpenAI kind of taking the lead in that way. Apple Intelligence will also have Apple's own AI technology, but here we'll wait to see exactly how this partnership will unfold.
Jackie Davlos going to be bringing it to us throughout the next hour or so. We really appreciate it. Now that does it for this edition of Bloomberg Technology. Stay tuned for all that's going to come out of Cupertino, but if you miss it, go check out our podcast. Find it on the terminal, online on Apple, Spotify, and iHeart. This is Bloomberg Technology.